Let me now also bring on board Suresh Mahadevan, Managing Director and Head of Equities with UBS Securities. Suresh, whichever way I cut or dissect these numbers, I cannot sugarcoat these numbers. These are horrible, pathetic and absolutely dismal set of numbers from Infosys.
Yeah, it looks, I think, certainly 2-3 things look disappointing. One is the guidance, I think. 6 to 8 has now become at least 5, I think. So, 8 to 10 has become at least 5. So clearly there is some issues with respect to growth there. Secondly, I think this quarter margin seems to have come down quite significantly, which is what has caused the net profit to be quite low. So I haven't read the full release or haven't fully digested, but at the outset, yes, it looks like a little negative data point for the stock and maybe for the sector as well.
Suresh, the management commentary as well has been a little jittery and cautious, saying that perhaps, this is not it and the entire sector is facing a whole lot of headwinds. The point is the poison out of the system with this kind of quarterly performance, or can we see significant underperformance in the future quarters to come? Because the management not giving a quarterly guidance as well is a telltale indicator.
See, actually, I think to be honest, I think our analyst has been quite negative on the sector, though I have been kind of neutral with a slightly overweight on Infosys because I thought maybe with the low expectations, the stock could do all right. But it seems like the expectations seem to get reset again this quarter, so we'll have to look at it. But, I think some of the bad news may be in the price earlier, though I think incrementally this is a data point which worries. So, as I said, I have just seen the headline numbers and basic thing. It will take us some time to figure out, and also the conference call to figure out what exactly is going wrong. But yeah, certainly at the outset it looks a little disappointing. The only saving grace may be the rupee unlikely to appreciate in the near term. So maybe, that rupee tailwind is the only positive, I would guess, for the sector.
So there's 3 things you would be monitoring very closely from the conference call which will decide whether in the near term Infosys is headed higher or lower. Which are those 3 things?
No, I think the biggest thing is growth here. I think people want to gauge what this company is going to grow at. Because already I think stock is at 14 times earnings when TCS is close to I think 19 to 20 times. So my sense is I think investors need to get some comfort around that. Can this company grow? And I think that some of their strategy may be, may have caused this lower growth in the past where, they haven't gone that much aggressively after market share because, they'd always maintained that, margins in the past. So I don't know what that is. But I think investors are, more than the quarter itself, which is backward looking in any case, but is a symptom of things to come. I think investors want to get a good handle on the growth prospects of this company and also their strategy in terms of, how they are going to address this, continuously under-delivering on expectations. So I think that is what people will be looking for at the big picture, I think.
Right. Suresh, do you think the change of guard for Infosys Technologies has failed? Because if I map Infosys performance versus the change of guard, after the change of guard, the problem really started for Infosys.
See, it's tough to, pinpoint one thing because, clearly, I think this is a company which is primarily an export company, right? As we all know, the world is not in a great shape. In Europe is very obvious. Even US, I think, while it relatively does better than Europe, I don't think it's in a great shape because, whatever data points we pick up speaking to some clients is that, pricing is under pressure and, so my sense is obviously, if industry conditions are bad, of course, some companies could relatively outperform. But beyond the point, I think, clearly it's more to do with industry conditions and probably a little bit to do with the Infosys specific strategy as well. But clearly, I think, a combination of this has led to probably company under-delivering, I would guess.
Suresh, just want to get your thoughts on TCS. After what we've seen from Infi, what does one expect from TCS, which has up until now at least outperformed?
Yeah, I think that company has been like the opposite end of the spectrum from Infosys, right? Every quarter they tend to do at least beat expectations or, even I went and met the company after the quarterly results. Things seemed pretty okay, but, we'll have to wait and see this quarter But, what Infosys management seem to be highlighting is probably an industry-wide problem, but maybe this company's strategy is probably a little better. That's what it seems like. But, let's wait for the quarter.
Suresh, but do you think Infosys is more like a 15-minute event, more like a 50-point Nifty event, and now it's time to move on?
See, it is difficult because, the stock hasn't done really well. I think it is B-rated from a PE perspective. So as I said, some of the bad news may be in the price, but, obviously the incremental data points people react to. But I think we'll have to wait and see because, if the markets were to, correct significantly from here, I don't really see Infosys correcting, like underperforming the market because of the rupee. But, in a bull market, if the markets were to go up, which is unlikely in my view, but then I think the stock may not do as well because the growth outlook is a bit cloudy.
And what happens to the 20-odd Indian mutual funds that have Infosys as their top holding? What can one dream of in terms of what the NAV would be like?
No, it's tough to say that. As I said, the stock, it's not like, as past several quarters, Infosys has disappointed. And, the PE obviously has come down. So clearly, I think on the results day, it'll probably trend lower. It's natural to expect that. But I think, let's wait for the conference call. Let's wait for, the information to get digested. But clearly, I think, something has to change here, right, in terms of, either management strategy or, holdings. So, we'll have to wait and take a look.
What about the overall market then, Suresh? Because up until now, it's been not all that bad. We've been range bound and we've sort of held around that 5,300 mark. Is it a move without optimism, or do you think the market is pricing in some significant reforms post the presidential elections?
Yeah, definitely. I think, there is definitely hope of some progress on the reforms front post the, presidential poll. And my sense is that at least going by the track record of the government, I find it hard to be optimistic. So I am very defensively positioned in our model portfolio. But clearly, I think, the market seems to be thinking that things will get a lot better.
Suresh, sir, which is the next big index heavyweight now markets would look up to? Because Reliance, they've lost steam. Infosys is out of flavor. Infrastructure, no one likes it. FMCG stocks are looking expensive. And commodity, God knows what's happening there.
See, I think, consumers and pharma still will continue to do well, I think. Because a lot of the India money is India dedicated. So, yeah, at the best, you can have 10% cash. So what do you do with the 90%, right? So as you rightly pointed out, some of the heavyweights are not in favor or, then I think, money chases up consumers and pharma. That's what happens, I think. So if the market outlook is cloudy, these two sectors should do very well.
And what do you like within the from the consumer space, and what do you like within the pharma basket?
See, from an analyst perspective, I think, the analyst is quite positive on most of the consumer names. But what I have in my portfolio are Dabur, Godrej Consumer, I've got Marico, I've got Midcap and Zydus Wellness. On pharma, we are pushing Cipla and Sun Pharma. Though I think the analyst is more or less positive on most of the names in both these sectors.
Any reason why you don't like MNC FMCG companies? Because the names which you like are Dabur, Marico, these are largely domestic FMCG names.
Yeah. No, I think we used to have a very positive view on ITC till the UP tax came. So my logic was, look, with states under so much fiscal pressure, you are seeing electricity tariffs being revised up significantly. I think increasing tax on cigarettes is a low-hanging fruit. So that's why we thought maybe, while analysts are still positive in the medium term, I think tactically the stock could be range-bound or maybe even see some selling. So that's why we recently removed ITC. But ITC is something we still like in the medium term. So, yeah, otherwise I think some of these other stocks, Godrej, Dabur, Marico, is where our conviction is today.
Suresh, what about the rate sensitives? Would banks continue to see an NPA overhang this quarter, and would autos dwindling sales volumes be a big dent?
See, banks clearly, I think, we are positive selectively. Primarily private sector we are positive on. So we like ICICI, we like HDFC Bank, we like Federal Bank, we like IndusInd. So these are some names. I mean, we like also S Bank. So these are some names we like. Public sector we are not that positive, though I think SBI is kind of an exception. SBI and Oriental Bank. So banks is definitely selectively positive. On autos, actually, with the exception of Hero, we don't have anything in our portfolio. And analyst is also not very positive on the auto names. So auto I am actually underweight. Banks also I am underweight, but with a clear bias towards private sector banks.
Suresh, final question. It has to be on Infosys. Now, Infosys has always traded at a premium to the Sensex, but do you think if they do not deliver the next 1 or 2 quarters, the perceived P multiple for Infosys will crack down from early teens to single digit?
Unlikely to stay there for a long time, I think, because I mean, clearly the company is going through a tough phase, but this is a high quality company. There's no corporate governance issues. Clearly they disclose quite a bit, and of course, at the end of the day, whether there might be crisis in US, Europe, ultimately countries have to be competitive. So I think IT outsourcing is an essential part of it. So I wouldn't write them off. I mean, clearly, I think the company is going through a tough phase, and let's see how they respond. So I wouldn't subscribe to the theory that it should trade at a single-digit PE at all. And also, finally, let's not forget the rupee has been consistently under pressure given our issues with respect to both fiscal and also on the current account. So my sense is that that at least will ensure. When in tough times, I think there is a flight to quality. Whether Infosys is, definitely quality, but the company is going through a tough time. So I think, if the company can turn things around in the next few quarters, things could change quite a bit as well. So I won't write them off yet.